Jed Meyer, welcome to see you on the show. I'm delighted to have you join me today and unpack some digital wow for my listeners.
Awesome. Well, thanks for having me, Doug. I really appreciate it.
Yeah, so let's start as we always do. Tell me, how did you get started working in the credit union movement? And tell me about that initial connection to the movement. And then what have you been doing?
Yeah, I think the initial connection was, my grandfather used to walk me into Burlington Northern's buildings in Minneapolis, where they had a credit union that served the workers of the railroad. And I used to go with him when I was real young, and we'd get a sucker into all those things. But then ultimately became, a member as I grew up, and it wasn't the primary banking always, but at the end of the day, we knew Brian, we knew Georgina, we knew the whole staff over there. And where it really hit me was I was fortunate enough after college and high school was to do a little bit of traveling with baseball when I was younger. This is a long time ago. But I remember being in San Antonio, Texas, and not having a car. It broke down. It's dead. It's gone. I'm in the middle. I'm 19. I'm living on my own in an apartment. It's kind of a new experience for me. I need a car because I have to work to pay for it. I worked all the way through college to pay for it, along with my scholarships. And I just called up the credit union, and I remember them saying, "Hey, this is your limit. Go out and spend it. We know your dad, we know your grandpa. We'll cover it. And then when are you going to be back? Because we didn't have DocuSign back in those days.
Yeah.
Just come in and sign the paperwork the next time you're back. And to be 19 and be away from home and to have a credit union know your character to that well and just ultimately say, hey, we'll give you 3 or 4 thousand to help you out as you do it, and we trust you, we trust your family, and we'll come back. That always stuck with me, right? That stuck with me. I finished my college career and I was actually going to go back to graduate school to be a guidance counselor and a coach because psychology is actually my major, was my primary major back at that time. But I had just gotten 2 degrees, communication, business, as well as psychology in 4 years while I was the captain of the baseball team working 2 jobs. And I'm like, you know what? I'm going to take a couple years off maybe here. And a football player from the previous years was managing a Norwest bank at the time. I said, come on over work for me for a couple of years. And the rest is history. Here I am. And I've been in the banking side and the credit union side, large and small. And really just later in my career, realized I've gone down a few paths. And I think it was more in that 2009-ish area. Maybe it was because of the economy at that time. But at the end of the day, we were ready to take a big job move with the large bank that I was at and move our family and do all those things. And I just looked at my wife and I said, hey, this is a journey up the mountain. And you know me, I'm not going to stop till I get to the top, right? I might not be the first, but I won't stop till I get to the top. But I think I'm on the wrong mountain. I don't know if I want to actually move our family for this. I think we'll be successful in some of those things, but I'm kind of missing looking forward to Mondays right now. Do I really want to move and take you away from a job you love for something I'm not 100% sure on here? So actually, not only did I not take the job, I actually sold all my stock, resigned and went to a smaller company back into credit unions and took a pay cut to work my way back up. And here we are, 12, well, it's about 15 years since then, but 12 years now as CEO at St. Cloud Financial.
Very good. So, you and St. Cloud Financial have been doing some cutting edge things in stablecoin, in digital wallets for your members. And I really want to kind of maybe start out by maybe a little bit of a tease of what you're doing, and then let's stop and go back to how you got there.
Yeah. I think right now what we're doing, and we are live. We're finally launching our product. We've been working this for about 6 years, but the best way for me to say it is we've built a bridge from TradFi to DeFi with a core centric solution. We started with a member and we worked outwards to DeFi. Most of the other people in our space are, looking at what's going to be the blockchain that's going to win, what's going to be the cryptocurrency that's going to win, which competitor, which product, and a lot of them are one-offs. And we really looked at it and said, hey, we think this market is bigger than just a product. It's not just going to be a bolt-on, something that just kind of lives alongside a TradFi. We actually think they're going to intermingle. This is going to get into that 30-40% and impact a lot of our business, right? From lending to deposits to all of those things. And we said, do we really want in 10 years to be looking at 10 different partners that were all managing all of their products because we bought one-off products and bolted them all on, managing all of that. By the way, and when we do this, we share all our PII with these companies. So we're actually sharing our consumer data with all of these companies. And if we can't do lending, now I'm basically taking my member, I'm encouraging them to take money out of TradFi system that I can't leverage in my liquidity or in my market. move it to another company that I partner with right inside my system, and then they might start doing lending to that member. That didn't seem like a winning proposition to me. So we looked at it and said, hey, is there a way for us to really look at this differently? Let's go back and study history. And so we really looked and studied history at the late 80s and early 90s of what did the credit union industry do when this new thing called Visa, MasterCard, these money networks popped up that had this plastic card where you can actually use that. What did we do back then? Nobody said, hey, I'm a Visa guy or I'm a Visa credit union and I'm a MasterCard credit union. And maybe they did back then, but where it actually ended up was we facilitated a switch, a bridge gap from our core operating systems into those money networks. And that gave us the ability to choose different partners at the different time, to use different iterations of those cards over the years from secured cards and different things, and kind of move with that market to say, hey, I don't want to pick the right product, the right blockchain, the right cryptocurrency. I actually just want to make sure I'm preparing my technology for this space because ultimately at the end of the day, the form of money is changing, right, into monetized data. So the form of value, it could be Bitcoin, it could be the US dollar, it can be an art in a tokenized art, right? So just think of value being monetized into data. My systems don't interact with those markets, those networks, right? My TradFi world doesn't. And unfortunately, in the DeFi space, uh, financial institutions aren't needed. So I actually very early on in this, I was not a crypto enthusiast, by the way. I didn't own any, didn't know anything about it.
How early on did this conversation start? You know, here we are in 2026. When did you start this conversation?
Well, in 2012, the multi-billionaire credit union I was at, the CEO said, "Hey, can someone go figure out what this Bitcoin thing is?" I raised my hand and said, "I'll go figure it out." And I came back.
2012.
So
Wow.
I came back. My assessment was it's funny money. I don't know anything about it. Let's not pay our attention there. Let's keep going, right? But I always paid attention to it after that. And really in that 2017, 18, 19, I kind of watched the market cap start to become material. And we're a small scaling company. So our number one biggest challenge every day is human capital. Our second biggest challenge is actual capital, right? So, but it's human capital is number one. So we have strategies around here with my executive team to say, hey, you have to spend 15% of your time studying other industries. So we understand where consumer behavior is going, how that might impact us. We don't actually have to predict it to be right. We don't have to go all in, but we do have to prepare to say, can we answer the question to say, if our members go there, what will we do? Who will we partner with? And have we done the work? Because if we don't do work before we have to, the minute my members demand something from me that I've done no work on, I actually have to take all my human capital and throw it at that and stop everything else I'm doing. And so we kind of look at it like the equalizer bar of a stereo. How far do we need to move that bar? Right. I'll bring you back to like the 2015 time or 16 with Apple Pay. Right. If you remember the articles back then, it's like if you don't launch Apple Pay on day one, your community financial institution might die an hour later. I mean, that was what people were saying. And we're like, hey, that's not going to be true. What would we do? Do our members need it right now? We have a unique opportunity that we are very intimate with our members. We get about 14% response rates from our members on our annual surveys, which is unbelievable data
Wow.
that
Yeah.
we get from our members, and we can get into that. So we just said, hey, let's prepare, understand what we're going to do, and let's keep talking to our members. So we were ready to launch Apple Pay, but we didn't have the human capital to do so. We had other priorities we thought were more important at that time, and so we kept asking our members. And I think it was about 3 years later we executed the strategy we had prepared for prior. And the same thing here. So digital assets in about 2019, we sat in a room and said we have 200,000 people in our local community, 41 financial institutions, of which we're one of the smallest, if not the smallest. I think we're like the second smallest. And we have 28,000 members in that MSA. How much market penetration should we're doing really well. What market penetration should we expect to be able to obtain? And how do we want to go obtain it? Of course, we're going to compete in every avenue of our organization, but where in the communities nobody raising their hand to be number one. And two areas that we identified was about 12% of the population here in St. Cloud are from a different ethnic background. Nobody was raising their hand to say, hey, how do we customize our experience into that community a little bit more and really ultimately become a primary financial institution to really assimilate. Boy, I learned a lot through that, Doug. I mean, learning that, a lot of times some of the other ethnic populations where they have multiple people in home, they don't actually have access to capital, right? And so they're paying big fees and some of those things, and there's different rules. How do we get in there and say credit unions can do this better? They can become owners. We can do this better. We don't have to get into all the the political jargon stuff, especially in Minnesota, that's going on right now. We focus on the human being. What do they need? How do we customize? How do we start with trust and stay there as long as we can? And typically that's forever. If with most of our members, right? Because 98% of human beings, we believe, do not want to cause you harm. 99%, right? Like, so I don't like building our systems here at the financial institution. We have to protect risk, but I don't like building all our systems around the 1%, right? I want to build around the 99% of people who walk through our doors every day and say, I would never cause you harm. You're my credit union. How do I build my systems to meet that need versus saying, I'm going to prevent fraud of the 1%er, which means all other 99% of you have to go through that same virtual headlock of me verifying and that you are who you say you are and having access to your own money, right? So we look at it a little bit differently. And yeah, 2019, we identified that
So
human,
you,
I'm sorry, digital assets as well as multicultural were two areas we were going to go research, study, and understand what would be our strategy would be.
did I get the data point right? Did you say your executive team has to spend 50% of their
15,
time? 15?
15, yes.
Okay. I was like 50.
No, 15. We used to say, hey, please read an article every once in a while in the industry. Some did more, some did less, to, hey, we got to study our industry, to, hey, consumer behavior and death by a thousand cuts when fintech started to come into play in 2009, 10. At the end of the day, we need to study consumer behavior in all markets because we're a retail institution. So consumer behavior, not only does it inform us because the financials are the things that backing it, but it also impacts what they like and how they like to do business. So we can get a lot of insight into where consumers are going by not just studying our credit union down the street or the bank down the street, studying just consumer behavior in our community.
So that sounds like the true origin story is that you and your board had the very forward-leaning sort of mental position to say, we want our whole organization's leadership to be looking strongly forward at where things are going and then solve for where things are going more so than doing better with what we have. I assume that was also in there, but it's also, spending a strategic time looking forward to kind of where the puck is going. That is interesting, especially when you fast forward 6 or 7 years. And now, at least to my knowledge, you're the first credit union that has actually come out with a digital wallet and a stable coin here in January of 2026. So that tells you how long it took to build. And now you were building it while the industry was figuring it out, right? So it might be a little easier now. But anything you can tell us any further about the strategic drive behind that? Because it seems like that's really where a board or a credit union might need to start, is to have that. Who do you want to be? Where do you want to go?
Well, yeah, 1000%. I think there's two things in the credit industry that we have to get better at recognizing. Number one, our decision-making process in credit unions. One needs to look at risk a little bit differently and find the risk you're deliberately going to take because batten down the hatches, risk avoidance, and we'll go through 2009, 2010, 2011. And as soon as that's done, the boomerang of normal business is going to come back to us and we'll be fine. As long as we make it weather the storm, we'll be good. That is not the way the world's going to work, in my opinion, in the next 25 years. It's served us well in the last 25, but we can't do that. You got to have foresight. The world's moving. If it takes you 40 executives at a multi-billion-dollar credit union to get into a room for 3 months to make a very important decision, you probably don't have a fast enough or agile enough decision-making process because the world's moving faster than that. So, and again, I don't have that answer. I'm just saying, hey, that's how we think here of, hey, we have to think differently. The world around us is changing. We are either going to evolve with it and lean into some of those things. And when we looked at the DeFi space, I was blown away. Our first survey basically came back and it said, when we asked the question the first time, this would be 4.5 years ago, we said to our members, how many of you own digital assets and how many of you want to own digital assets in the next 2 years? It was 22% said we either own or want to own. And this is 4 years ago. So we've done that and we can show you the data, but so we've done that every year and it's consistently been in the low 20%. And the only time it hit 16%, our survey went out right after the FTX collapse. So I actually thought it was going to be way lower, but it wasn't. And so looking at this saying, hey, consumers, they're looking for this. And so when we started researching this, the first thing we uncovered was, where do you find quality data and information, right? I, as a CEO, was struggling to figure out. I'm not a crypto nerd. I didn't own crypto. None of those things. This is all about strategy for me of, hey, the form of money, the rails at which it's moving is changing. How will we react to that as that becomes more material was really the question we were asking. And if we can get good at that, we actually can go out and compete for member acquisition and providing something our competitors are not first. And that's really where we started. When he said it took us this long to build it, we actually built it much faster than that. We actually have been waiting for the regulation. A big part of our strategy was partnering with regulators, right?
Oh
So,
boy, we hold on, we got to
yeah,
get there, but I'm not
yeah,
ready yet because
I know.
we need to go there. Yeah.
Yeah.
So
So,
you look forward, you see the DeFi trend, and that is a material interest for your membership. Then what? What's next?
well, what's the risk and the opportunities? The next question you have to ask, right? So, should I care? If my members are off doing this, do I care? Does it impact my core business? Is it a place I have to care about? It's the first question. Second of all, if it is, what are the risks and opportunities in that space, right? Because this is a place where, so we started looking for research. The first thing we found was I couldn't find education. The best experts in that industry were self-taught,
Hmm.
right? People. That's what we found is Google or find somebody who's been in this space on their own for 10 years. That was
It
that
was
was kind of what you found.
it was
So
pre-AI. You didn't have AI to just
yeah,
ask, right?
yeah.
Yeah.
So we started going out and really finding, and we interviewed a ton of companies, and we brought a bunch of people in, and we landed on Deland, which was a CUSO owned by another credit union at the time. We had worked with Deland. They've been around since about 2009. They've been doing core conversion system optimization since 2009, serving credit unions exclusively. They've been in this space forever, and they really had their stuff together. They knew this space, and so we hired them to do basically about 17 hours of training with our executive team. Then we did, I believe, 2 or 3 2-hour sessions with our board. And then the summer of 21, after all that training, I went to my board and I said, the only thing I've learned so far is I don't know enough to do anything, right? Because I feel like I just learned that there's something out there and I'm in kindergarten. So we aren't doing anything. I got to bring some expertise in here. It's not super material right now. We're not looking to launch. So over the next 18 months, I told them I'll look for some sort of two for hire. So as other positions become available in our credit union, we'll look for somebody who has this expertise and the expertise we need for our core business. Well, 6 months later, our chief lending officer position opened up. We knew of a gentleman in the community who had worked for a $1 billion bank, $1 billion credit union, super well versed in SBA and business lending. We're going to go recruit him, and he applied for our job. So he didn't know this, but he came in. We actually had the job offer waiting for him when he came in for his interview, and the rest is history. So he joined us. We wrote a strategy, and we just said, hey, and this is right at the same time NIDIG was coming out, right? And we just said, hey, let's stick to our guns, right? We definitely will vet that. It's a buy sell. It's not a bad option. It's a bolt on, some of those things, but that's not where we're going to start. We're going to start with education. Because if the CEO of the local credit union can't actually figure out this space and doesn't have great quality places to go get great information, our members are not going to have it either. And that's very dangerous. Our job is to protect our local economy. It's to protect our consumers. That's how we operate. That's what credit unions do. We're an extension of the owner of the company that they are, right? They own this credit union. We are here to facilitate that for them. So we went out, we found a lot of self-taught individuals with very prominent positions, kind of just a very high level, loose definition. So we found doctors and attorneys and business owners that were in the crypto space. And we created a nonprofit called the Minnesota Crypto Council. So we all put together, it has a board, and it's been providing training for our community for the last 4 years on a quarterly basis.
So
So
you
uh,
created that?
we created that with partnership with other crypto, and so we've been at St. Cloud State University to different places where on a quarterly basis our community has a place to go if they want to learn more about this space.
Hmm.
And so we've been doing that now for 4.5 years. So education was number one, then safekeeping was number two. Because back then, remember, this not only was legislation and regulation at an all-time low, there were still people believing this was completely a fraud network
Yeah.
back then. And
Yeah.
so we're looking at saying, okay, let's stop talking about what we are scared of doing, what we don't know. Let's talk about what could we do today if we wanted to do something, and where is the spot our members need our biggest help. And what we identified was we're never going to make a ton of money here, but we've been storing value for our members locally as a primary accountability for 100 years, whether it's gold bars behind steel cages to important documents in their safe deposit box. We need to figure out safekeeping. So I'm not going to encourage our members to get into this space, but how do we create something where they can have their local FI do the same thing with what they believe to be value? So I didn't actually have to answer the question of, do I believe in the space or not? I said, my members do. I'm not going to convince the other 80% who aren't in this space. I'm just going to say, how am I going to serve that 20%? And safekeeping was number one. And so we started that. And again, FTX collapsed not long, about a year after we started this journey.
And then
And
you're
it was
like, oh,
big things. And more people know this than they did 4 years ago, but you don't own the digital asset if you leave it in the exchange. You don't own it. You actually own participation and rights to a pool of digital assets. So if it's not your keys, not your crypto, you've heard all that stuff. So until you take it out of the exchange, you're actually not an owner. You're just somebody that actually has a lien interest, and you're a little bit down the line of those individuals, right? That's what happened with FTX of saying, hey, this is it. You have rights to those things, but I can leverage those assets. And if I leverage them improperly, I have to pay those people before I pay you back your money. And
wow.
so looking at, hey, guys, do you know when you're buying these digital assets, do you really own them? Are they really yours? And they're not until you take it out. And so the crypto enthusiasts have all these cold storage wallets. We have so much crypto probably sitting in our safe deposit box that we have no idea is there. We probably have hundreds of $1,000s in liquidity just sitting there that I can't redeploy. So we
Yeah.
looked at it and we understood when the biggest difference from TradFi to DeFi for local FIs, which is really the fearful place that should strike the fear into every CEO who wants to be a perpetual organization and remain local because they believe we are important to our local economy, right? We are. The minute we go away, our local economy is not benefited when we don't look at our local economy and be resilient, help small business get started, and all those things. When a dollar leaves TradFi in the past, so if I lose on innovation 20 years ago and the dollar leaves me to another institution, that dollar's life cycle is going to be back to a centralized ledger multiple times in its life cycle. And I'm going to have a chance to earn it back, right? And I can go compete for that dollar and get it back into my institution and then have them become my member, liquid it, make a margin on it, put it back into the community, do everything credit unions do, right? Well, in the DeFi space, that dollar leaves and there's never going to be another moment in time where that dollar is forced back to the centralized ledger. And the only two core purposes we have are centralized ledger and liquidity pool. Well, if you were reading the articles over the last couple of years, you'll see large companies out there saying, like MasterCard, Visa, and some of those saying, we're not sure we'll need community FIs as our liquidity pool in the future in this space, right? And we don't need them as a centralized ledger. So when I started learning those things, and then I learned that I can move money on the rails of blockchain in seconds for a thousandth of the cost
Right.
and have it be safer. It didn't matter what the headline said. If
Yeah.
the headline said digital assets is horrible or blockchain is horrible, I'm like, nope, it's coming because that if you learn
That
anything in business, that's coming.
a
It's coming. So
massive
I know
cost
it's going to come.
savings,
Yes.
super inexpensive, super fast, and totally transparent. You're not going to stop that, right?
It's
Yeah.
coming. It's coming,
Yep,
right? So
yep.
so we realized really quickly, hey, TradFi is at risk. This is bigger than just a bolt-on product of innovation where we might lose a couple members. And a lot of people, I think, were underestimating. Hey, we'll lose about 2% of our members who want to go out into the fintech world and do this crypto stuff, and then they'll keep doing their business with us. I think that was maybe the mentality. And I've been trying to beat the drums for years now, saying actually this is going to impact more. And it also led us back to the core-centric solution that we're going to talk a little bit more about here in the fact that when I look at the core-centric solution, so starting with our core and working outwards, my ability to actually answer all the important compliance and regulatory questions actually becomes easier. Verifying the member to the BSA, to redundancy, to firewalls, to all those things. So I'm actually taking the best technology I have in my institution and I'm using that to actually plug into those networks
All right.
versus,
I gotta have you help me because I'm
yeah,
getting lost. So we got
yeah,
we got to Deland, right?
yeah.
Partnering with you, and then you formed the community crypto organization, and so then you build the knowledge within your community and within your organization. Now, what happens next?
So when we looked at it, it said safekeeping is where we got to go. So
Okay,
and we want to be able to get to a spot where we're not choosing a product or feature set as our what we're trying to build here. We're trying to build a
right. We're gonna
platform
just
that's
hold
a
it for
bridge.
you.
We're,
Yeah.
we're doing what we do with the Fed ACH into the SWIFT network. We're doing what we do to plug into the Visa and MasterCard network. We built the switch and the bridge that says I can turn any core at any credit union and you can plug into any DLT monetary network within 24 hours. That's where I'm at today. That's where I've been at since June of 2024. So I've been plugged into Bitcoin, USDC, and Ethereum with our test group since June of 24. So I've been holding them actually live using our core in a hybrid self-custody option for our members. Okay. So maybe if I read it this way, traditionally there's been like three or four um, ways to store digital assets, right? So remember, going back to safekeeping was our number one. So there's like three
Mhm.
or four online exchanges. You got your software wallets, you got your hardware wallets, and cold storage offline. Those are the way people are storing those assets back then when we looked at it. What we did basically was just engineer an entire fifth way, which basically said our fifth way is, and I'm going to read this just so I articulate correctly because I wrote it down, but we engineered a entire fifth way column, institutional grade digital asset safekeeping and security. The bridge from TradFi to DeFi, we've converted the entire infrastructure and expertise of our banking operations into the most secure, convenient method for consumers to secure, access, and monetize their digital wealth in local economies. So
Wow.
that was our AI co-pilot told me to say that to you. So I wanted to make sure I gave them
Yeah.
some good due of say, hey, this is how you would articulate that.
Yeah. So back up to like how does that get made? Is that you does your team create that? You said the core. So is your particular core provider integral to that? And then of course you already teased it. We got to talk regulators. We got to talk about when they got involved and how you educated them and worked through that process. So
Well,
please.
Deland is the solution, right? So the first place we found in education, they actually had some similar beliefs to us. Hey, your core is the best place to start. We can build this differently. We've already had some thoughts and concepts. So we just started partnering with Deland to build this product as a client. It was owned by another credit union. Okay. So as a client, we worked with Deland for 2 years and we did ask, hey, if we're going to help you build this, can we actually invest in the QSO? And the answer was no at the time. Until basically about January 2024, it came up and said, "Hey, you guys can buy the QSO." So we're like, "We're in, we'll buy it." And we went and found a couple other large partner credit unions. So we have right now our ownership group of credit unions are myself, St. Clair Financial, about 430 million. We have Blaze Credit Unions just under 5 billion out of the Twin Cities. We have Ultra Credit Union at about 3.5 billion in Wisconsin, and we just brought on Canvas as another out of Denver, a $5 billion credit union. So that's owned by credit unions, displayed by credit unions. We actually now own this QSO, but we started as a client and we started building this technology using our core. So we started building the CU Digital Asset Vault. And the CU Digital Asset Vault basically is an off-balance sheet hybrid self-custody option for our members, where they have the ability to actually store and secure their digital assets. We don't do the buy sell. We don't treat it as fiat. It's not in our consumer, but it's basically I don't like saying it this way because I think it too oversimplifies really something a lot more complex. But just think of an off balance sheet safe deposit box that's virtual. Like we're storing data for them, right? Because the digital asset never leaves the blockchain. Right. Just like ultimately at the end of the day, when we plug into Visa and MasterCard, the Visa MasterCard networks are protecting the assets. We're plugging into the network and we're actually protecting their actual credit card numbers, their CVV numbers, and we're protecting the data. So this is very similar to plugging into those networks, right? So we started building this, and we got to a spot in June of 24 where now we are live. We are live and deployed, and we'll be up to about 9 digital currencies that our system will be plugged into within the next few months. So here we are. We had the NCOA in here in November, and they
Yeah, yeah.
looked at
So
our
back
solution.
me up to that
Yeah.
conversation. Let's go through how that
Let's back up
started.
even further.
Like,
So
yeah.
20 November 2021, I believe it was somewhere in there, or it may have been 22, kind of merging together. We started reaching out to regulators saying, hey, we have two choices here, right? Innovation in credit unions is someone goes try something, the regulators come in and they either say we like you or we don't like you, right? I mean, it's kind of backwards. And we just said, hey, there's nothing material here. We're still learning. Why don't we start partnering with them as early as we can? And of course, it was a normal relationship where it's like, hey, I have a job to do, you have a job to do. Your job is to protect risk and consumers. So they were very skeptical at first, which is exactly what we thought. But like, hey, we're going to partner with you through this. We're going to continue to talk to you why we believe educate. And that was 4.5 years. Wrote a letter to the NCOA board, I believe in January of 2022, asking them to deal with the custody conversation that we're still dealing with today, to say, hey, We actually have now moved away from the custody because I think it confuses people. At the end of the day, it's not about custody. It's about participating in money networks and storing monetary value, right? That's what it is. We can do the custody and we can get into that. But we started working with all of them. And ultimately, in June of last year, when the Genius Act passed, everything flipped. We're now we're looked at as more of a partner, somebody that can help the industry. We actually just had the DeLand team training in the NCOA specialist last week. They'll do another training here this spring. We'll be at the state auditor convention training in state regulators and auditors at their national convention.
Hmm.
And it really, to your point earlier, we really started with our member and a solution of member acquisition, found ourselves out in front of the industry and said, hey, we're still going to do the work to help the industry here because this is a very important thing in our history. When we look back, we actually believe this will increase consolidation, and anybody just paying lip service to this thing right now is going to go buy a bolt-on. They're going to be happy with it for about a year and a half, not know how much more risky it actually is to be at a layer 4 type relationship in blockchain compared to a layer 1 type relationship you would have with your core centric solution.
And I would assume that the credit union digital asset solution that DeLand has created is available for other credit unions to participate in and have a digital vault available for other credit unions around the country. Is that right?
100%. So it's been live, like I said, not deployed since June of 24, working with our regulators. We finally got there in November. They were in, they basically said yes, and then also come train us on this world. This is great. This we love. This poses no risk to or very minimal risk to the credit union industry. This is what we need, more of stuff like this. So then we were comfortable at St. Cloud Financial to go out and launch. Right. And so we launched our friends and family. So our CU Digital Asset Vault is now deployed as of December 22nd, I believe, of last year, to friends and family. Next week, Tuesday, it'll open up to our membership locally without a
Oh,
line. Uh,
wow.
and then ultimately, a month later, we'll go out to the entire public. We really wanted to have a control rollout here, but our vault is live. And when you say other credit unions, of course, yes, yes, come in, look at it, the platform. Don't think of it as a product, think of it as a digital platform that does a few things for you. Because we're talking about vault right now, but we're not talking about. We actually have buy sell so we have our vault, buy sell, deposits, and lending already built as well. So as even though I'm working with my members to say we're going to let you have the hybrid self custody off balance sheet, as soon as regulators or legislators come out and say you can custody these assets, we just flip a switch and it's right in our core. And for our members, we can actually have that bridge. And now remember, it's just a bridge, right? So without custody, my bridge today only gives me one advantage as a CEO. It's no different than the bolt-ons. I'm just not sharing my PII with a third party. So I'm not sharing my consumer data to allow my members access, right? And that's really the key here, Doug. Remember, the key here is you're not needed as a centralized ledger or a liquidity pool in DeFi. So what is your place at the table as a local FI? It's access and trust. That's actually the value we bring to this space. It's access and trust. And so we want our members to say, if I want to access those networks, I know where to go. My local credit union that I'm an owner of, that I trust, that will give me good advice and give me access to those networks. They can get access anywhere else. Same as investments. They can go directly to Fidelity or BlackRock or anywhere else, but they come to my credit union, talk to my investment advisors, and then we bring them there based on what that is. That's the way we see the space working in the future. And so ultimately building it in that way of saying, hey, it's just a matter of flipping a switch. So today it's off balance sheet. As soon as custody, we flip the switch. It actually comes into custody. Now I can actually start invoking some of the technology we've already built to say, hey, we're going to do Bitcoin backed loans. We're going to actually ultimately have some reward programs within the digital asset space. And we use the word Bitcoin because it's probably the most well known, but this is all of those cryptocurrencies. There are 26,000 of them, by the way. It's like .com. We've identified 9 out of those 26,000 that we're interested in right now. 9. So be very careful. This is an area you should do a lot of research. Crawl before you walk before you run, understand it, reach out to people like us who can come in and do education for your teams. But that's all built and ready to go. So we're still just waiting on regulation and legislation. And then in the meantime, we're out there basically trying to help the industry gain more knowledge, And then we are bringing in onboarding credit unions to say, hey, I'm buying DeLand's platform. Yes, they have a wallet. Yes, they have the vault. Yes, they have all those things, but it's an apples and oranges comparison to a lot of our competitors because we have an off balance sheet custody option for our members, right? Which is why they're partnering with third parties because they can't custody. So even the credit unions or our competitors are going to a BitGo or they're going to Union Bank, they're going to some of these other institutions that will custody it. As soon as that happens, we can flip the switch and credit unions, and you're running it right out of your core. You're not sharing any PII. You have access to 10 to 12 use cases as the industry continues to emerge. So that also means as a CEO, you're in control of the pace of your innovation and development. You're not relying on a third party. And it's the best way to actually build and operate in this space from our position. When custody happens, now I'm actually on my balance sheet. So when they go from TradFi to DeFi, my dollar stays in my liquidity network. Today it leaves. So the only thing we built with our vault right now is an easy way for it to come back that didn't
Mm,
exist before, right?
mm,
Because Doug, the minute you took it, put it on a cold storage wallet and put it in my safe deposit box, very hard and expensive for me to get that liquidity back into my TradFi network to redeploy to the rest of my members. So it's all sitting there. Now, if I have a virtual option that's just like cold storage, it's actually safer, and we will show that. We can show all the data on that. Um, but it also has the ability and ease of use to actually move it back to TradFi. And that's what I wanted initially.
mm,
So custody
mm.
is important, and we got to get there. But as the industry today, sign up with the land, convert your technology, and that's all cores. That's not just mine. I'm on Correlation Keystone. It's amazing core. We love it. We partner with it. Correlation has actually announced already last August. And we just trained in their Salesforce Correlation go forward solution for all of their core clients will be DeLand's solution. That's what they're reselling to the rest of their clients. But we are live in DNA. Two of our owners are DNA clients. And we are also live in Scimitar, also another one of our owners. And that was very strategic for us to get ownership and live in three of the biggest cores in credit unions in 2025, and we successfully accomplished that.
Wow. Incredible what you have done and how you're like just all right, we're ready, just waiting on the regulators now to be able to take the next step.
And another good example, Doug, of the platform being agile would be this summer. So we partnered with Metallicus. So Metallicus MetalPay, they're a stable coin.
Mm,
They're prevalent in the credit union space now. They partnered with CU Ledger, and they're a great group. And they built their blockchain from the ground up. So somebody that we've now formed a corporate partnership with. They went out and they're working with a lot of the credit unions in Valera to do the sandbox last June. If you saw that, the sandbox, they're going to work through that. They're working with that. Well, we already had a partnership with them. We're not in their sandbox because simply we just didn't need to be because we're out ahead of everybody else. But we ultimately said, well, we're going to launch our own stablecoin as well because I have the DeLand technology, very easy for us to do, for us to basically just go do that. So Cloud Dollar became real at the end of last year, one of the first stablecoins, if not the first stablecoin in credit union
first
land.
one I've heard of, yeah.
Yeah, white labeled. We like everybody else, you have to figure out the liquidity side of that, right? On 24/7, 365, right? When mint and burn, and you have to back it 1-to-1 within equivalent assets. So when we're not open on Saturday at midnight, we got to be able to operate there. So we're not going to start there right now. Stablecoin was always something in our roadmap. It was just down a little bit further. It's great for payments. It's got some great use cases. I think it's being overhyped right now. I think you'll see that die down just a tad. It's great and it's good and it's something we want to have. But it's just one of our use cases. DeLand's the platform that allowed us to get to say, hey, we can go into deposits, we can go into lending, we can go into storage, we can go into stable coins. That's the platform that gives us that agility. So for us to stand up Cloud Dollar was very easy for us. Our first work on that this year will be actually in a white label B2B type transaction. So we're actually going to launch our stablecoin. Our first test case and kind of what we're going to use that for is with a co-op that banks with us. That has they're a food co-op that supplies people nationally, and we're going to use our stablecoin for settlements between their co-ops when they're doing that, and that's how we're going to test and use our stablecoin initially. So that's what 2026 looks like. We're launching the vault. We're looking on the stablecoin. DeLand's out there now selling because we are live, and most credit unions don't want to be first. They want to know somebody else is live. Well, we're live now, and we're ready to go. So we're looking forward to having a good year. And at minimum, if you choose somebody else, just please do the research. look at really where do you think this industry is going, not just where we're at today. Because if you just buy a bolt-on, you're gonna regret that decision later, I think.
Yeah, the board buy-in to this frontier sort of activity has got to be robust, right? What kind of alignment do you need to have between the vision of the board and the executive to consider a partnership like you're describing?
Yeah, that's a big deal, especially for a small credit union like us, right? But we're a growth-minded credit union. When I was hired, they basically said we don't believe we're a survivor. We're $100 million credit union in 2014. We're about 430 now, and they just said, hey, we want you to create a perpetual organization here. We've been in this community at that time for 85 years. We want to be around another 100 years. So we can't just run a fiscally responsible organization. We need somebody that will do that primarily, but also will grow this credit union in the future and is good at taking deliberate risk and staying out and painting that vision. So we've been on this journey for a while. So I think my board's a little more open to us when we bring ideas.
Mhm.
We always bring opportunities to our board. So this wasn't new. We brought other big ideas we didn't do anything with yet, at least yet, to our board. So they get these often. I tell them my job all the time is just to provide opportunities, whether we walk through the door or not. That's a different decision. Our job is to look at the opportunities, create future opportunities, because again, in a scaling small company, when you have to do something and you only have one option, it's usually not a good situation to find yourself in.
Yeah.
So
You
we're
don't want.
trying to say, hey, how do I create one, two, three, four doors in digital assets through all our research, through what we do? We don't have to choose any of those paths, but we want to be prepared and we want to have those doors available for us so that when we're hit with that, like everybody else would be hit, and the consumer's demanding it, the industry's demanding it, we have four options to choose, not just one bad option that we have to launch or we lose our members. And so staying out ahead of it. So our board's built that way, but it was tough. I mean, it was a lot of years, a lot of education.
Oh yeah.
But you know how that is when you go through that with the right intent. This is not about ego. It's not about Jed's really enthusiast about crypto, so he wants to have a personal agenda here. There's none of that stuff. It's our members have a need, our community has a need. There's an opportunity from a business perspective. We are out in front, so let's monetize that for our credit union and our members. Number one, right? Because that's who I'm working for is them. Is if I can say, hey, we found ourselves out in front. Now we can actually monetize and give a little bit back to our members because of that work. We're going to do that too as an owner of Deland. So, but going through that journey, if you know anything, that's where trust is developed, the depth, the trust, because our board was like, there's a couple of our board members were like, no way. And we're like, great, stay there as long as you can and don't move unless you want to, because that's healthy. That's healthy. But we're not going to stop having the conversations because as you said, no, we're going to work through it because there are a lot of people who are saying yes. And then when you go through that exercise, some of our biggest naysayers before are now our biggest champions because they actually work through all their fears and thought processes. And that's a little bit of my fear right now. I just think our credit union industry, now that we've gotten over the hump, again, it used to be I had to convince people like you to have me on a podcast to talk about this stuff that people might be interested to now everybody's calling saying, hey, 4 years ago they called us crazy. Now we're calling you for advice, right? But don't make a quick, easy decision. That's my biggest advice to credit unions. Don't do that. Don't go out and say, hey, this thing's out there. It's prevalent. We got to do something. Let's bolt this thing on. I think that's not the right thing. And I think you got to dive into this industry and it will be worth your time because it will impact more facets of your core operating TradFi business than I think a lot of our CEOs across the country are giving it credit for. So.
For many of our listeners, this may be the first episode that they've heard with you and the creation of a credit union stablecoin. Where can folks hear more as you develop data to see what the asset flows are like, how this becomes a revenue generating, what the usage is? Are you gonna having talks at GAC, or will you? How can my listeners plug into this this initiative both at St. Cloud as well as DeLand?
So the first thing would be I would encourage you to connect with Deland and myself on LinkedIn. So we're writing articles and have been so pretty consistently. I try to stay up on that. My team and I would try to put content out there for people that would value to help the industry. So that's a great place to get data. Yes, we're out speaking all the time. I never aspired for that either, but apparently we're out there. I spoke at GAC last year. I'll be speaking the weekend before GAC at the CU Collaborate event this year.
Yep.
It's not finalized yet, but I do believe either us or Deland will be part of the GAC breakout sessions at some point, either on a panel or something. So that's still coming. So yes, you can do it there. But we're out and about. And then at the minimum, just my personal contact. Let's put them in here because I think a great place to start, whether you believe everything I just said about Deland or not, that's the beauty of it. I go do the research. I think you come to the same outcome I did because this was where I started. I started where you started, completely skeptical, completely like I don't know what I'm going to get myself into. And I found, hey, through all that work, this is the right solution for this spot. But if you don't believe that, doesn't matter. The land still has an education ability to provide that. So we're out, we're spending more, Deland's spending more of their time not at big conferences. They're actually coming into a lot of boards of large credit unions and really walking with them in their strategic planning. Same as we're doing with the NCUA. It's about information and improving their depth of knowledge more so than anything about our solution. Our solution is just the actual solution to
Right.
what the information we all have to better grasp is. So we're trying to help with that. So there's plenty of places and ways that you can connect with us.
So let's kind of break them out. So it's St. Cloud Financial Federal Credit Union, right?
St. Cloud Financial Credit Union, not federal, but we are a
Oh,
state
pardon
charter.
me about St. Cloud Cr- Credit
Financial.
Union,
Yep.
Financial Credit Union,
There you go.
and then Deland, Deland.
DALAND. Yep. DALAND. Okay. So Deland. Um, DelandQSO dot, I believe, com. But well, again, we'll put that maybe in the screen here.
Very good.
Um, so yes, they're out there. They also do a ton of other things. So a lot of our DNA, what a lot of people don't understand, Deland's been around since 2009. It's not a startup. That was also an important thing for our board of saying, hey, they've actually made money working with credit unions for 15 years. It's not just digital assets they provide. So yes, you can go buy them because if that falls off the map, we think you're going to get our money back over here because they
Mhm.
do really good work. So point being is they're helping our DNA clients with a lot of other things inside their system, our Scimitar clients, our correlation clients. So there's a lot of other things that the land does as well. That the technology that this vault is built on also has other services. So when I bought the technology for our CU Digital Asset Vault, I also got the ability to do other things within my system and my core that technology has the ability to do as well.
Yeah, and maybe in a future episode, which I'll be very interested in capturing, we can kind of break out some of the metrics that you start to see from that, like how did the technology build your commercial or your lending, and what areas
Mhm.
did you see those ancillary benefits? I think that'll be very meaningful to our listeners, and I want to check back in again on the progress with your stablecoin, the how engaged your members are, and then if this becomes, it sounds like it must be just a cost center so far, but we're at the very beginning of this, and how does this become a trackable revenue center? Right now,
Well, I
it's
think
it's retention, right? But
you brought up a really good point. When I'm sitting in front of CFOs over the last 2 years at large institutions, and a lot of times their first question would be is, how are you going to give me the revenue out of this space?
too
Right? Which
early.
is the CFO's
Yeah.
question. It's a great question, right? I'm a CEO. I want that's like what I would expect my CFO to ask. My answer very, very quickly is I can go through every projection with you that you want, right? And there's plenty of opportunity and ability for money to be made in this space. You shouldn't focus there right now. What you should focus on, how much of your current money is leaving you and not coming back because you're not as relevant anymore. That's number one. So 2023, I had $1 million leave my institution to exchanges. Last year, it was $15 million. 3 years, 15x liquidity. And by the way, right now I have $380 million in deposits, and 3 years ago it was probably 280 million deposits. So you do the math, the percentage of the actual deposits leaving. So when I looked at that CFO of like, hey, you're a $4 billion institution that has $1 billion or $1 million every month leaving, that might never come back. Let's focus on that ROI first. And
Hmm.
then let's look at how you might monetize. Because the first thing is, stop the bleeding, become relevant, and then see how you might be able to look and capitalize on the opportunities. And that's what I love about the core centric model is it allows you to do that.
Jed, thank you so much for taking the time. Just incredible work you've done on behalf of your members and the time you spent on behalf of the credit union movement. So, thank you for all the credit union members you will help with this content and with the work that you and Deland have done. I'll be very interested to see if I can meet you at this year's GAC. And then you will have an open invitation as you make progress. I want to come back to this subject again, and let's continue to capture the ideas that listeners can use to say, you know what? That's not a fit for my credit union. We're just fundamentally conservative in a different way. Or, okay, let's start to look into this.
Mm-hmm. Hey, Doug, for those fundamentally conservative credit unions, you can be fundamentally conservative within a new money movement network. You can, again, to me, for those things, when you, again, conservative credit unions, guys, got to go where your members at, got to stay relevant, and you got to go in there and you got to manage the risk. And you can do that. I've been there. That's what I want to encourage you to say. You can be conservative in this new space. It is not the wild, wild west. There's plenty of things that you will love in that space that are very similar to how you've operated your business before, but you got to go all there. If you do the toe in the water, you're actually doing the opposite, which is I want to be fundamentally conservative. So I'm taking the easy solution, bolting on. It's actually more risk because you're not diving into it. So that's my encouragement. Do the work. And I promise you, you will come up with a solution that's right for your members. And hopefully that's the land. And if not, we're still here with you in the movement, ready to go forward. So.
Awesome, Jed. Thank you so much. I love it. I'm really, really, really interesting interview. I can't wait to check in again.
Awesome. Great. Thanks, Doug. Appreciate it.